Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 18th of October. New Zealand's CPI beats forecast, but will it hold the RBNZ back? Overnight, New Zealand's CPI for the third quarter came in slightly stronger than expected, paring back some bets that the RBNZ will cut rates again as early as at its November meeting. The CPI rate declined, but less than expected, causing the Kiwi to surge. Nevertheless, despite this development, we maintain our view that the RBNZ is on track for a November rate cut. We don't believe that such a modest positive surprise in the CPI will be enough to hold the bank back, especially following repeated signals from officials that further policy easing will be required. We should note, though, that the bank's decision is likely to be influenced by the updated two-year inflation expectations, which comes out on the 2nd of November. We may reconsider our call for a November rate cut in case inflation expectations rebound strongly, but absent such an encouraging development, the RBNZ is likely to deliver on its easing promises. In Australia, the Aussie surged as well during the Asian morning Tuesday, following a speech by the new RBA Governor Lowe and the release of the bank's October policy meeting minutes. Aussie dollar began moving higher after Lowe's comments, as he was relatively hawkish in our view. He said that the current level of interest rates is suitable for the economy, and added that monetary policy easing globally is reaching diminishing returns. Subsequently, the RBA October minutes maintained a neutral tone overall, which may have cast more doubts on the likelihood for a near-term cut and thus provided further support to the Aussie. However, both the minutes and the governor noted that at the November meeting, the bank will have access to the Q3 CPI data, as well as updated economic forecasts, which would provide an opportunity to consider the economic outlook. This suggests that inflation data will be once again critical for RBA officials, but bearing that the new governor appears more tolerant of low inflation than Stevens was, we see more uncertainty on whether a disappointing CPI print will trigger an immediate response, as was the case after the Q1 and Q2 inflation figures. As for today, during the European day, the UK CPI data for September will be in the spotlight. Both the headline and the core rates are expected to have risen. The forecasts are supported by the nation's services PMI for the month, which showed that firms raised their prices in response to increases in the costs of fuel, food and wages, as the pound's depreciation had an effect. A notable acceleration in the CPIs could cause the pound to correct higher. We get September's CPI data from the US as well. The headline rate is expected to have surged, while the core rate is forecast to have remained unchanged. This suggests that movements in the prices of volatile items such as food and energy are the reasons for the discrepancy between the two figures. Even though the Fed pays more attention to the core PCE price index as an inflation indicator, accelerating headline CPI will still be a welcome development, as it may increase the likelihood for a December rate hike even more. As such, this could encourage the dollar buyers to take the reins again. We have no speakers scheduled for today. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.